Against the backdrop of marginal economic recovery in 2021, Nigerian stock market recorded a slowdown in growth, but the performance indices remains in the positive territories. Though the sustained positive trajectory in the market was slower compared to that of 2020, it however surpassed the growth recorded so far in the nation's economy by 2.04 percentage points. Capital market restarted 2021 on the back of an impressive 50.03%, staged a remarkable surge in demand for equities, riding on the return of local investors, making the NGX market capitalization, which shows value of the investment in the stock market, gained over 1.24 trillion naira year to date to close 2021 at 22.3 trillion naira from 21.1 trillion naira at the close of trading in the year 2020. Well, joining me now virtually from the United Kingdom to give an analysis of the performance of the market is investor analyst and stockbroker, Mr. Gbenga Ogunriola. Good afternoon, Mr. Ogunriola. It's very good to see you.
Thank you for having me. It's nice to be here with you.
All right, let's start with your review of the market, seeing what has happened in 2021. Despite all of the challenges, the market was still able to wrap up the year on a good note, at least on a positive note. Give us an overview of this.
Yes, I believe that the Nigerian market did well in the year under review, even though when we look at it physically compared to other markets around in Africa and the major exchanges in the world, probably we didn't perform up to those other exchanges. But generally, if we look at performances over the years, we would see that the Nigerian capital market has maintained that trend of doing well regularly, as against some other markets that we have some years where they close on a low, some years on a high. But generally, the market has been impressive in the year 2021. We gained just slightly 6.07%, which compared to some other exchanges in Africa, that's like Ghana Stock Exchange, the Lusaka Stock Exchange, that did far better than we did. But overall, we can still say that the market did well in the year 2021. There are some high points in the market which going forward is going to affect the market positively. One of them is the mutualization of the Nigerian Stock Exchange, and I believe that alone it's one big plus that the market had in the year 2021. Also, we saw a number of companies coming to the market to raise a bond. Chief among them was MTN, that did an offer for sale, a successful offer for sale, and they were able to raise they were able to exchange 505 million ordinary shares. I believe that going forward, the market will see some level of stability. Even the year 2022 seems to be a bit critical, but overall, I think that we are starting on a good note, and going forward, the Nigerian capital market should see some level of development and growth.
A great one there, Mr. Ogunriola. I'm also seeing that the market was also driven by domestic investments and a recent renewal of the foreign portfolio investments and all of that. Do you agree that all of this helped to, help to shape the performance of the market this year? Or the last year, I beg your pardon.
One of the lows that we had in the year 2021 was the decrease in the participation of foreign investors. But the high point of it was that it encouraged more local investors to come into the market. And one of the fears that we normally have in the market is that if we have so much of the chunk of the market being held by foreign investors, anytime they decide to dump those stocks, it's going to affect the market critically. So we are seeing a situation in the last 1.5 years or 2 years where we have seen more local participation in the market, and that in a way is also good for the stability of the market, because if we have locals invested in the market, they are here to stay, and come what may, they hold on their stocks, unlike foreign investors that once there's any issue in the policy, they tend to dump stocks and cause panic in the market. So the fact that we are seeing more locals coming into the market to take positions, I believe that is a big plus in the market, and it's going to help in deepening and also causing a high level of stability in the market.
Let's not look at some best performing stocks like we saw them. Well, it might not be, we saw Morrison Industries, Royal Exchange, Vitafoam Nigeria, Honeywell, Flour Mills, Champion Breweries, and some others. And on the other side too, we see some insurance companies not doing too well, even some banks and Score Nigeria and all of that. What's your reaction to this?
Okay, so the market is the cyclical market. The idea is to see some stocks do very well based on certain happens in terms of share reconstruction, in terms of restructuring of the organization, in terms of probably some share sales and all that. And because of that, there's always activities and more investors coming into the market, like we had in the aspect of First Bank, where there was a lot of activities in the shares of First Bank in the year 2021, particularly towards the end of the quarter. So in such situation, you see stocks moving up and having high level of liquidity. A number of stocks that probably had been moribund before now and had new entrants, investors coming into them, actually show some level of moving up. And for those that probably are still not having that level of interest, that's why we see them probably on the low or even coming down further. But I think that as time passes on, we will see more investors coming in. Probably you see investors coming in to buy out existing shareholders so that they can take control of such companies. Just like we had in 2021, there were a number of companies that came, bought out other companies, and they took ownership of those companies. And we're going to see more of it also, especially for those stocks that appears not to be doing too well. They're always the attractions of investors, believing that by the time they change management and pumping some money, they're able to revamp and turn the fortunes for the company. So I believe that for those stocks that didn't do too well, the year 2021, all is not lost as long as they're still operational and running. And I believe that with time, they're going to see interest from major shareholders who will come in and buy out probably existing shareholders and revamp the fortune of the company.
And let me read this. Let me almost finally now. Dangote Cement, MTN, Airtel, Boa Cement, Nestle, Zenith, and others contributed 90% to the 23.3 trillion naira market cap in 2021. This looks like the big players in the market. How does this come to you?
Yes, in the market, there are always the big players, and the not so big players. And I believe that those big players, they dictate the tone of the market, really. We have a number of companies that did well in the year 2021, but because they are low cap stocks, the impact wasn't felt so much in the market. So when we look at the likes of the MTNs, of the Dangote Cement, Boa Cement, and Zenith, you discover that the price movement of those stocks were just marginal, unlike some other stocks that had almost 100% return on investments in the year 2021. Those stocks are low cap stocks, so the impact that they have in the market is not so much generally. So that's why we see there tend to be a kind of market not moving up too well in the year 2021 because of major, because of movements in the high cap stocks that were not really so significant. But it's it's everywhere in the market. You see all over the world where there will be major players and there will be low players. But at the end, it's all and it's the general aggregate is taken to see the overall performance of the market.
Okay, then before I let you go, figures are in for today. Our market is closing negative. All share index is down 0.51%. Top gainers we have Boa Foods, O&O, Aiko, Adova, Caverton. Top losers Unity Bank, Royal X, Regalings, UBN, and Benefit. What is your reaction to this? This figure's coming in today. It's been up for some days, 0.51% down. And I'd like you to also react to the Omicron variant. Do you see it anyway affecting trading, even globally? It's a two-in-one question.
All right, so let me start with the Omicron variant. I believe that the global market has been negatively affected with the COVID-19 pandemic. And most markets in the world now are trying to see how they can recover, and they've come to terms that there's nothing they can do but to live with this pandemic, and the best thing is just to see how to mitigate against it and ensure that it doesn't shut down the economy. So I don't see an economy in the year 2022 saying they're going to shut down because of COVID, because it's going to be really it's going to tell adversely on the economy. Many economies are struggling, even the developed economies, they are struggling to be able to cope with economics realities and situations currently. And another lockdown or shutdown is going to affect the entire world economy. So I don't see the Omicron variant or any other variants coming out with such impact that would now make governments globally to shut their economies. So that said, for the gainers and losers that we have in the market today, market has just started, and I believe that we still have a long way to grow this year. It's just the normal thing. You have gainers, you have losers, and I believe that the investors are beginning to shape that, to check the various variables and factors that would affect their choices this year. One of the factors generally is always, the price of crude oil, the exchange policies of governments, and some other intricacies that might come to play as time goes on. But I think that if the governments are on top of their job and they have focused this year to ensure stability in the economy, I believe that it's going to tell generally on every financial sector in our economy. And I believe that the government should have it at the back of their mind, and they should know that this is a competitive economy. Of late, the developed worlds are thinking of increasing interest rates, which before now very low, and that would ensure that the funds that normally flows out to countries like Africa and the other developed worlds are not in there as it used to. So we need to be on top of our job to ensure that we're able to still attract some foreign participation in the economy this year, because it will be difficult. But when the foreign investor sees that you know what you are doing, that they stand to gain from all that you're putting in place to develop your economy, then they will come in despite the safety nets that the own government is also providing. So I think that our government needs to do a lot this year so as to ensure that we are competitive in the global markets.
Mr. Gbenga Ogunriyola, thank you so much for your time. Investment analyst, stockbroker, joined us from the United Kingdom. Enjoy the rest of your day.